Hello everybody and welcome to another amazing video of DIY investing. For today's video, we're going to be talking about how I know that the bottom of Bitcoin is in, and we're going to be comparing it to all of the prior bear markets to give you guys an understanding of how and when every bear market bottom has ended and what has happened shortly after. This is really important because I still see a lot of people that are asking me, and most importantly, many people are still skeptical that don't believe that the bottom is in. So we're going to be taking a look at all of our big indicators that have flashed major buy signals, what has happened after that, and how to go about profiting off of it in the next few months. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, so here we are to start off today's video. We are going to be taking a look at Bitcoin. I'm going to be breaking down how and when we know that the bottoms are in. We're going to be looking through a lot of different price action with Bitcoin, analyzing each and every bear market up to this point. And then we're also going to be diving into the stock market and explaining why I believe that all of this factors into ultimately proving that the bottom is truly in. Now guys, if you find value at any point throughout this video, make sure you guys leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. And if you guys would like to join my signals program where you guys can actually follow all the trades that I take over this next cycle, links are in the description. Now first things first guys, the way that I like to look at a market cycle is for a couple different factors. This is how we know when a market cycle is finished, how we know when the market cycle is time to buy it, most importantly when the bear market is over. Now I actually learned this back in 2016 from one of the traders that really isn't on Twitter a whole lot anymore, but his name is Crypto Picasso. Me and my buddy paid a little bit of money. It was actually half a Bitcoin for his course, which keep in mind that was back when Bitcoin was worth, like $500. And so back at this point, we paid half a Bitcoin for this guy's course, and it's still to this day the most valuable course that I have ever seen inside of the crypto markets. And so what I'm going to be doing in today's video is breaking down some of the basics that he taught inside of that course, and then explaining how it factors into the total price history of Bitcoin. Now, first things first, guys, the way that we determine a market cycle will have this big rally up, it'll have a sharp crash on the downside, and then we'll go through this long-term period of reaccumulation before we start the whole process over again. And Bitcoin is a very emotional cycle, which shows that there's a lot of emotions inside of the market that cause these massive ups and downs in the market's price. Now, what we're going to be talking about is how to determine when a market cycle is over. Now, we're not going to get into all of the details that he mentioned on the course because we don't have enough time, but the big factors here are a big rally in price, a sharp decline on the way back down. The bear market pretty much erases the majority of the mania phase, which is basically the blow off top, right? When the market just goes vertical, very little pullbacks, that's when we get our bear market. And the bear market usually erases that entire rally. Now, inside of Bitcoin cycles, we can look at around, an 80% correction from the high of the cycle to the low of the bear market. And inside of this first cycle, this was actually the biggest one. It was 93%. So obviously, the more liquidity that gets added to the Bitcoin market cap, the more money that gets added as a whole, the less that the volatility will actually be a factor. And we've seen that every single bear market up to this point. They've continuously gotten less and less massive on the way back down. This one was our biggest bear market. But the way that we determine when a bear market is actually over, one of the rules is about an 80% correction. That's where I would target to be buying. And at this point inside of Bitcoin, and now that they're getting less, I would say anywhere from 70 to 80% of a decline, and that's really where you want to be stepping in. Now, what ends up happening is we create a descending resistance, right? And inside of this descending resistance, this is pretty much where the majority of the bear market retraces happen, where we make lower lows and lower highs, right? Lower lows, lower highs, lower lows, lower highs, until finally the price breaks out of the descending resistance. It retests it as support, just mainly breaks out. That's the thing that you need to pay attention for. And then that's what starts the reaccumulation phase for the Bitcoin cycle. And we can see that that was the case inside of our first cycle, although it was more volatile than any of the prior bear markets. Now, that is the main thing that I'm watching for inside of determining a market cycle bottom. One of the other big factors that I like to look at is where we are at as far as the time frames go, because the time frames are very important. When it comes to analyzing market cycles, Time frames are equally as important as anything else that we might follow in our trading plan. And the reason being is because the circle of life literally follows a market cycle in and of itself. You have spring, which is where we plant the seeds, where we look to ultimately see what kind of crops we can grow. And then into the summer, we start to see all of those seeds that we planted begin to sprout and begin to grow. And then we have the fall. And this is the point in which we begin to harvest all of our crops. All of those seeds have already planted, they've sprouted, and now we're beginning to harvest all of those seeds that we planted early in the spring. For crypto cycles, you're going to find that the market bottoms in the winter, and that's been the case every single bear market up to this point. So our 3 rules that we look for, about an 80% correction, I'd say 70 to 80% from the all-time high to the low. We have a descending resistance. Once the descending resistance gets broken, that's where we begin the new uptrend. And we also look for our bottom of the bear market to happen in the winter months. And that's exactly what happened in our first cycle. Now we fast forward, we go into our next major bull run, and then this takes us to the blow off top, and then we start the next bear market. Now, same kind of thing, from the high to the low, we were looking at about an 86% correction inside of this bear market. We also form a descending resistance here. Lower lows, lower highs, all the way throughout this period. Until finally, we get, I meant to mark this. And then finally, we get a breakout right here. We retest this as support. And that's what literally sets in our next major cycle. We were looking for about a 70 to 80% correction. We saw an 86% correction from the high to the low. And then after we flipped our descending resistance as support, that's where we would expect to see the new trend begin. And now we get our cycle low that takes place once again in that winter time frame. Then the same thing restarts all over again. Blow off top, bear market comes, we retrace the entirety of that impulse on the blow off top, and then we do the same rule of thumb. Start off with the ROI. The bear market was about an 84% sell-off from the high to the low. We have a descending resistance as well. That would be indicated right here. And you can look at this one a couple different ways, but this is basically the way that we would draw this. We didn't have quite as many retests along this downtrend, but we did do it right here, and that was our second data point. And then we also did it right here. So we have enough data points to dictate where the descending resistance truly was. Now, obviously, once we broke outside of that, and you could really even market this entire move as that move. Once we get outside of the descending resistance, that's really where the bear market is confirmed to be over. And if you guys notice here, the very peak low of this happened December of 2018. So once again, the bottom of the bear markets are going to follow along with the winter months. After that, we break out, and then we start our new uptrend in its place. This takes us to, once again, our current cycle, and we're going to just follow those exact same rules that I shared with you, dictating where every single one of the bear markets ended, how it ended, and our different rules that we need to follow. Now this is what we're going to see, that the added liquidity over time has shown that the volatility has continued to diminish. So, as Bitcoin has continued to grow, as it's got more adoption, as there's more money inside of this market, the volatility continued to decrease. Ever since our first cycle, we saw a 94% sell-off, we saw an 86% sell-off, we saw an 84% sell-off, and now in this one, we only saw a 77% sell-off. And so this is going to be a pattern that continues to play out over the course of our cycles, in my opinion. The more liquidity that enters a market, the less volatile that market is going to be. And we can look at every single market throughout history as a factor when determining that. Now, as it stands right now, we have already started to see a breakout. And so if we draw a descending resistance, once again, this is where things get very interesting. We can see that inside of our bear market, we held below this. We almost retested it here. We rejected there. We actually broke out at this point here, and then we retested that descending resistance as support. And so you're going to get two different ways of a breakout inside of a downtrend. If we have a downtrend, we see lower lows, lower highs all the way down. Sometimes it breaks out and then just holds support like this and then starts going up. Other times it goes down, it breaks out, and then it makes a lower low, but it's still following inside of this downtrend. It's just retesting that downtrend as support. And so there's a few different ways that it can go about doing it. Nonetheless, it's still the exact same thing. Once we break out of a downtrend convincingly, And especially if we hold support on top of that descending resistance, it's further indication that the bear market is over. And we can look at every single one of the Bitcoin cycles throughout history as a determining factor. Every single time we have a descending resistance and Bitcoin's price breaks outside of it, it is a confirmed trend reversal. Now, remember guys, our final rule here. Where did the breakdown and our peak low actually take place? Well, it happened in November of last year. So obviously we're still following along with the winter months. If we are looking at about a 70 to an 80% correction from the high to the low, if we're looking at a descending resistance that has been broken out of and flipped as support, and then we're also looking at the peak low of that cycle bear market happening in the winter months, those are all three huge indications that the bear market is over. And that's why I was so confident in buying throughout this period of time, adding to my positions, taking in new positions, because I knew based off of all of our price history of Bitcoin, this is exactly what we needed to see for a bear market to be over. Now, obviously there was way more fear inside of the market, more than ever before, more than any of the prior bear markets, because of so many different centralized exchanges and lenders going bankrupt. But that just gave us an even better buying opportunity considering Bitcoin made a lower low. And we were back within 2017's market structure. So many people are going to just slap themselves for missing out on that opportunity. We saw even ETH go back down into 2017 market structure. It was the first time we'd ever seen that inside of a market structure. It was the first time we'd ever seen that inside of a market cycle. And so this is going to be a huge opportunity for early investors because of the fact we've already broken out. Now here's one of the big things, guys. What are some other indications that we can look at right now? Not looking back at our prior bear markets, but what are things that we can look at right now that are going to determine if in fact the bear market's over? Let's assume that even though I've shared with you guys all three of these different scenarios that have perfectly predicted bear market bottoms for Bitcoin, let's assume that you're still really skeptical on everything. You still have too much fear for some reason. Let's go look at a couple other things. First things first, we're going to look at the S&P 500. Bitcoin is highly correlated to the S&P 500. In fact, it's correlated to an 80% correlation as far as its price. Whatever the SPX does, Bitcoin does, and vice versa. And so with that being said, what we were waiting for the longest time, keep in mind, the S&P 500 peaked here on the 3rd of January. Where did Bitcoin peak? Well, it was just a little bit premature of that, but it was in November. Nonetheless, if we look over here at the very top of this move, this is where Bitcoin peaked, this is where the S&P 500 peaked, right? And so they're really closely related. I'd say that's close enough to an 80% correlation in my opinion. Now, we can see that ever since the S&P 500 topped, we have seen lower lows and lower highs all the way throughout this consolidation. And what happened when we actually broke out of that, Bitcoin kind of led the way a little bit, but Bitcoin started breaking out here at about January the 7th, and the S&P 500 pretty much did around the same thing, except it was just a little bit behind, right? The S&P 500 retested this descending resistance here. We technically got right onto that same descending resistance, but we still had to wait just a little bit longer. Nonetheless, you can see what I mean. The entire time that Bitcoin has been in a bear market, the S&P 500 has been in a bear market as well. And it was once the S&P 500 finally started to hold support. Keep in mind, every time we hit this descending resistance, it was a lower low, all throughout here. And then once we actually stopped making lower lows, and then we got our secondary attempt at a breakout, that was where confidence entered back into the Bitcoin cycle, and that was where Bitcoin started breaking out. It's not coincidence that whatever the S&P 500 does, Bitcoin does, and it's because Bitcoin is the most risk-on investment in our entire market history. There's nothing more risky than investing into cryptocurrency because it's all a speculative investment at the end of the day. I might have a hunch that says it's going to be the future. You guys might believe the same, but the average person inside of our economy isn't going to be betting on that so much. They're going to be focusing in on other investments, real estate, things that are a little bit more safe, right? And so it takes somebody that's got a lot of balls, more or less, to invest into crypto because it is so much more volatile. And so what we see here is whenever the S&P 500 is in a downtrend, Bitcoin is in a downtrend. When the S&P 500 breaks out of a bear market, Bitcoin is broken out of a bear market. And so if we're looking at our stock market as an example, this is a better example than any other indice inside of the stock market because this is basically the risk on investments inside of the stock market. The S&P 500 shows equities. Equities are more viewed as a risk on investment, although there are some that we would deem, fairly safe, right? With that being said, if Bitcoin is highly correlated to equities and the equities have now broken out of their bear market bottom, they have not made a lower low, they've made higher highs and higher lows, this is a huge indication that tells me that the stock market is bullish, that if the stock market's bullish and Bitcoin is correlated to an 80% correlation in price, what does that say about Bitcoin, guys? That's what I mean. Now, we can also come over here and look at another example, and this would be the Dow Jones. Now, the Dow Jones actually broke out first. We can see that the Dow Jones broke out here at about November, and that was the very bottom of Bitcoin's bear market. And so it's not coincidence to me that the very peak low of the Bitcoin bear market bottomed right when the Dow Jones broke out of its bear market low. That's, in my opinion, what gave it the market investors a lot more confidence to buy back into Bitcoin. And not only that, but to buy back into the S&P 500 is simply just because the fact all of our major indices broke out. Now, the Dow Jones is going to be less risk adverse. It's going to be a lot more safer investments. And so because of that, with it being the first one to break out, that should have been the early signal. And I've been updating you guys with this chart telling you that, hey, the Dow Jones is broken out. If the Dow Jones broke out, then that means that the S&P 500 is most likely going to follow. And from that point, that's exactly what happened. We did get a sell-off when the Dow Jones pulled back inside of this move right here and consolidated. This was nothing more than a support and resistance flip. Like I was just talking to you guys about Bitcoin. When we have a downtrend and we flip that downtrend as support, that is where we get the confirmed trend reversal. And so it's not coincidental that once the Dow Jones flipped that descending resistance as support, that's when all of the new money started to come back into the stock market. Buyers started to get more interested. They weren't as skeptical anymore. And that was the exact same moment of time that Bitcoin flipped its downtrend and has now been impulsing ever since. We have one final chart to look at, and this one is going to show a lot more risk investments than potentially even the S&P 500, although Bitcoin isn't quite as correlated to this as it is with, the S&P 500. They're both pretty correlated though. Bitcoin's going to follow the stock market because all of the money is in the stock market as it stands today. And so until Bitcoin gets mainstream adoption, we would expect that as long as this trend is a factor, we should focus in on that trend. We don't want to ignore it by any means. But here's what we're looking at, guys. Literally every single one of our indices that we can look at into the stock market, from the S&P 500, from the Dow Jones to the NASDAQ Composite, they have all broken out of their bear market bottoms. And not only that, but they've all held support and, held support for a long period of time. And so they didn't make lower lows. Now that they're holding support and breaking out of descending resistance, these are all major signals that the bear market is over. And what we would expect to see is these to rally up. We'll have some type of correction, but these are going to just continue to go up along their way. We don't know exactly how the consolidation will look, but in my opinion, all of these being breakouts of their downtrends perfectly showcases what is about to happen. The Dow Jones looks ready to make a move back up to these all-time highs, and that's what I'm pretty much watching for. If you got to expect that if the Dow Jones goes back to all-time highs, the S&P 500 might not go straight to the all-time highs, but it's going to rally up here pretty hard, right? And then it'll go through consolidation as it makes its move to break all-time highs. Once the S&P 500's broken all-time highs, there's really not going to be much that's holding Bitcoin back, and I think that that's very apparent in this last cycle more than ever before. Bitcoin is synced up with the stock market, and that tells me that as long as stocks are performing well, we will expect to see Bitcoin perform well in the process. And so guys, if you're still bearish on this, at the end of the day, there's nothing more that I can explain that's going to explain things in a way that's going to make you bullish. And I'm not trying to make you guys bullish necessarily. I'm just trying to share with you guys all of our prior bear markets, how they've played out, and what we've looked for in case of determining where the heck the bear market bottom is at, when it is over, and all of those things. And so thus far, we've checked off every single one of the things on that list. Now guys, I've had a lot of people asking me to cover the DXY, and so we're going to be getting into that right now. Now, with the FOMC meeting, we actually saw that the DXY temporarily broke down below my support level that I was looking at, which, if you guys remember, I was basically looking at this entire consolidation here as being the area where we're going to consolidate. And so from this point, we've basically retested these levels, and it's looking like we actually got a fake out below that support level. And we'll zoom in here on the shorter time frames. This was the FOMC meeting, and then the dollar actually broke out. So the dollar has technically made a higher high. Now, a lot can change in these meantimes, but for the most part, I've been talking about why I expect a bounce off of this level, and so I am still expecting that, especially now that we got this big bullpen hammer. This thing looks pretty massive. I honestly believe that we're going to get some type of a bounce out of this, and we'll most likely rally back upwards of about 105, and we could even rally upwards of 108. There could be a decent sized move that comes out of this. It might be something like this. But ultimately, I am expecting this to continue on in its downtrend. And so what we're seeing is all of the stock markets are breaking out. Everything's kind of breaking out. And now the dollar is looking like it's going to bounce. And so we could see a market correction here fairly soon. And I've been talking about that for a little while now. I still expect that Bitcoin, after it makes a rally back upwards of about 27K or so, we're going to expect to see a wave 3 correction. This is wave 1. This is in wave 3. Once we rally up here a little bit more, we'll get a wave 4 correction. And then from there, we still have more highs to go. And so throughout that period, this correction that's coming, I believe that that's where we're most likely going to end up seeing the dollar bounce. Because if the Bitcoin's looking like it's going to correct, then most likely this is also going to correct. And so I would expect to see the SPX rounding up to about 4,300. And then from there, we'll probably get our correction before going higher. So that's the way it's looking based off of all of our markets. Now, with that being said, guys, I've had a lot of people asking me, how the heck do I bridge to Arbitrum? I'm missing out on a lot of this money. I see you talking about all these Arbitrum altcoins. Will you please explain how to do it? If not explain, will you send me a link that will explain it? And so we're going to talk about that right now. So first things first, guys, I've gone ahead and found the same thread that I actually followed when I participated in all of this stuff. And so here's a warning. There's not some specific time frame that is said that we're going to have this airdrop. It's all just speculation at this point. But because of the fact some of the devs on Arbitrum have hinted at it, I think that you can most likely say that it will happen at some point. I don't know when the deadline is. I don't know if you're already too late. I don't know if I was already too late when I did this a couple months ago. But I think it's worth doing it anyways because of all of the money that is finding itself inside of Arbitrum. So this is an entire thread. It's going to teach you guys the step-by-step process on how to actually qualify for this. And with all that being said, it's kind of an expansive thing to do. There's a lot of different things that you're going to have to do, a lot of different counts, a lot of different networks that you got to set up. You got to buy some NFTs. I would say that the total cost at this point is probably about 50 to 100 bucks. The gas fees are obsolete on Arbitrum, so I really wouldn't worry too much about that. It's just the fact that you kind of have to buy an NFT, and then you do have to mess around with some of the money. You have to swap around on some of the protocols that are built on Arbitrum. You got to mess with their network a little bit. You can literally just use a couple cents to do all of that. So I'm not going to say that it's, free by any means because it's not, but if you have like 50 bucks, I can almost guarantee that you can actually do all of this. And it might not even be a full $50. I did this a couple months ago and it really wasn't that much money. And so if I did a couple months ago and it wasn't much, the only cost that you're really going to have is the NFTs, but I don't really think that they've gone up very much. And so that's just what I'm going to explain right now. I will link this inside of the description of this video so you guys can all find out how to do this yourself. It's not that hard. It just, if you follow along with this, it's definitely not hard. It's really easy to follow along with. It's just kind of an extensive amount of things that you have to do. So with that being said, I want to talk about one final thing because I've heard a lot of people hating on Arbitrum for some reason, people that are big Polygon fans, and they were saying that, Arbitrum is nowhere close to Polygon, but Arbitrum just flipped Polygon in TVL. And if we look over here, Arbitrum's TVL is sitting at 1.32 billion and Polygon's only at 1.2 billion. And if we're looking up here, we are quite a ways off from flipping the TVL in some of these other projects, but when we're looking at all of our competitors down here, Arbitrum is distancing itself from everyone else. And I expect that this money inside of Ethereum, Tron, and Binance is going to ultimately come trickling back into Arbitrum. Arbitrum is going to be stealing the spotlight. I truly believe that the epicenter of all DeFi is going to be done through Arbitrum because there's really nothing else out there that is as good as Arbitrum. They've already got the lead start on everybody. The only one that I would say is comparable is Optimism, and Optimism is the biggest competitor to Arbitrum right now. And so I think Optimism is going to do exceptionally well. And with Arbitrum, not having a token, I think it's a good time to go ahead and get this, all the little things that you need, finish all the tasks inside of this thread, because at that point, that's how you're ultimately going to be able to set yourself up for the airdrop. The OP airdrop was worth $50,000 at its peak. And so if what we're looking is, Arbitrum having significantly higher TVL than Optimism, almost double at this point, then at that point, if this thing gets airdropped to everybody, it literally could be worth a lot of money. And for a lot of you guys watching, it could be life-changing money. So if you have to pay 50 to 100 bucks to go and try and participate in all of those different things that are being required, is it really that much? Is it really that big of a deal? In my opinion, it wasn't. I don't know about you guys. I'm not saying that, some of you guys might not only have just a small amount in your portfolio, but at the end of the day, I think it is worth it considering how much money people made off of optimism. So guys, if you found value in this, make sure you guys do me a favor and leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. If you guys want to see all the signals that I'm posting, I'm going heavy into Arbitrum plays. I'm moving out some of my high caps that I've been in for a long period of time. And so if you guys want to be able to follow along with every single thing that I'm doing, how I'm diversifying my money, what cryptos I'm getting out of, where I'm cycling that old money into new money, NFT picks, all of that stuff, you're going to need to join my Signals program. We've been nailing a lot of good picks. I've nailed a lot of them on YouTube for you guys. And if you would have got in on the Signals before I talked about them on YouTube, you'd be up even more. And so if you guys want to join, links are in the description. It's a lifetime membership. As long as you guys sign up, it's a one-time fee. You'll have access to every single thing that I'm doing throughout all my investing. If crypto dies at some point and I move out of crypto into other markets, you're still going to have access to all of that. And so I appreciate the support, guys. I look forward to seeing you guys in there. And with that being said, I will catch you in the next one. As always, peace out.